Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 27th of October, 2020, time 6 p.m. Central Time. Well, we're seeing COVID rampage all over. Chicago today, they said that they're closing all the restaurants down for indoor dining starting on Friday. So in the city, if you're coming here, forget it. You're not going inside a restaurant to eat. Bars are closed. Bars that don't have indoor dining, everybody has to be outside. We're Chicago. You know, we're talking 35 degrees at night, 45 right in that range. We're not built for outdoor dining. So for all purposes, we're back to where we were in March, February and March when this whole thing came on. France is talking tonight about going into a full lockdown as a country starting Thursday. You're going to see it in other parts, Italy, Spain. Everybody's got it. Nobody wants to do this, but it's where it's at. New York City, I think they've got now, 95% of the state. So if you're traveling to New York City from another state, in theory, you're supposed to go into a 14-day lockdown. This is not good. So what we're getting is the mentality in the marketplace of what? Risk off. Don't want risk on trades. You're seeing that tonight hitting the gold and silver to a bit, the copper market, certainly the stock market. Now, the stock market did its darn best today to try to rally. You know, the Dow was under pressure from Caterpillar and some of the other parts, but the other indices did their best. They weren't really able to do very much one way or the other. As for the foreign currency markets, well, tonight, they're feeling that pressure as the market pushes it down. You probably see the dollar when it does open a bit higher. Bonds and notes getting a bit as well. By the way, the API numbers came in terribly bearish. I mean, big time. These are way off the chart. I think we had about a 10 million net build between the crude oil and the products. That is a monster number. They're not looking for anything like that on the EIA report. If they get it, that could even be more bearish. What gold has done on a weekly basis is for the week, the market's pretty flat. We're up 70 cents. We're going into Wednesday trade. We're already in it as I'm putting this out. You can see how you fell back to that 18-week moving average and you're just sitting there. A close under it puts the market with a bearish bent. But you know how this is going to play out. Trading this right in front of the election and these COVID announcements, it's dangerous, folks. There's a time when maybe you keep your hands in your pocket or you're a longer-term trader. I'm just giving you a warning. When you take a look at gold on the daily bar chart, it doesn't get more sideways than that. I mean, that's classic. You're going to see you're in a pipe, as I call it, with the Bollinger Bands. When we look at the swing line, you've got lower highs, lower lows. Now, it's interesting. GLD, if you're an ETF trader, threw out a buy signal as I see it on the close. It made higher highs, higher lows, closed over the 18-day average. When we look at the gold futures, we have lower highs, lower lows, and we're stuck between the 100-day average, as I pointed out for the past 5 days, and that number. Here's the number that bothers me. Watch this. Look at how the Bollinger Bands were developing what I call that pipe. In these pipes, you get chopped apart. The market acts like it's going to break out one way, goes the other, doesn't follow through. That's typical and very much part of this. In order for this market to get friendly in gold or negate the downtrend at the very least, you got to take out the 1913 level. 1913 was both 1913.80 was today's high and 1917.30 was the prior high. So if this market's going to hang in here, I'm not even going to say 1913. I'm wrong on that. It's 1917.80. If it takes that out, well, I can make an argument that the downtrend's out of play. Can I do anything right here? I don't see it. Momentum still drifting slightly to the downside. So I just see that we're stuck in what I call that pipe, sideways action. The long-term traders that bought here are still in fairly good shape as the market's still up about $50 from where they're in. And I think they're just holding on to see what goes on. The gold-silver ratio is not telling you a thing. The market is corrected from the 70 level back to the 77, 78 zone, right against that 18-week moving average of closes. The silver market's in the bear camp with lower highs, lower lows, but it's fighting a very clear battle at that 18-day average, and it too is in a pipe. Now the pipe is wider than I like to call it. You've got 25, let's call it 37 high and 2369 low. That's too big of a range. It's normally much narrower than that. So I'm going to say it's more of a trading range, but visually, I want you to get used to what a pipe looks like. Momentum's still pointing down. Bears have control of this until you get back in this market over this high, which is 24.98. When we look at copper, here's what I was looking for. You lost the embedded reading. Therefore, if it stays lost, which it did on day 2, I'm looking for price to get back to the 18-day average fairly soon. Did it tonight. I can live with that. So what is the trend? Well, what if I tell you it's neutral? While you've got the market in a downtrend on the swing line, prices are still trading at this hour at least at 308, which is over the 18-day average, and momentum is pointing down. When I come to the platinum market, battlegrounds, the 18-day average, and it's been this way since back here at the beginning of the month. You had one move to the upside, and if you didn't take advantage against that upper Bollinger Band as a bull to liquidate, you gave it all up very quickly. If you take out 870.80, the trend turns down, and you put into play the possibility of an attack of the lower Bollinger Band. So the bulls have the control of the market right now. Their zone to support's 878.5. Any move under 870.80, in my opinion, negates the uptrend, puts in that play with resistance on rallies back up at the combination of the 100-day average and the Bollinger Band. Now remember, all these markets are very much watching COVID and the U.S. election, so you keep your eye on that. In the Palladium market, let's take a look at how a market can fail. Here we had a pattern of higher lows, higher highs, and suddenly we started dropping down. Now this is the low that mattered, 2366.80, duh. Get a bounce, and yesterday's break, 2368. The reason I've got the arrows down is because today, if the market took out that 2366, you're in a full-fledged downtrend. Lower highs, then you'd have lower lows, putting into play the possibility of the lower Bollinger Band. Resistance now is what the support was. It's back to the 18-day average. You're caught in this sideways action, but the bulls, in my opinion, threw in the towel. They gave up today. In the dollar index, I'm waiting to see what happens tonight, but I think, remember I was just saying the 13 level in the gold? This is where that 13 level comes up. 93.13, double top, take that out, probably going back to the 18-day average of closes, close over 93.33, and you could actually have a bullish chart. Why would the dollar get bullish? People are scared. They're buying the best currency. Dollar's not getting any aid at this point from Nancy Pelosi and Steve Mnuchin and President Trump. Forget it. That will come later down the road when the election results are known and whatever's going to happen. And by the way, Ms. Barrett is now a full-fledged Supreme Court justice. She was sworn in this afternoon in the it's the conference room of, I think, the East Wing of the White House by John Roberts. That she had one ceremony last night. This was the formal one by the Supreme Court setting her up, and she's in. Now the question is, who's going to win the elections? When will we find that out? What's going to happen with COVID? How bad are things going to get? And that's what you're dealing with. I write about all this twice a day for my clients. Now, I write a different way than most people. I give you headlines. Then I'll give you a few sentences as to what they mean to me, and I move you on. I'll talk a little bit of technicals and so on. The idea is a short read, right to the point. I keep the vast majority, I think, of my subscribers, many of them for many years. My reports look like this. They're meant because you have to take your time. And I'm going to write the things that I think matter, to the futures markets. If there's nothing to do, I tell you there's nothing to do. I've gotten rid of the audio commentary. So while this says it, we're preparing a new ad. The reason is, with my full comment, with my full research, you get my morning videos. That's what you need, not my commentary that I talk about. If you haven't tried what I have to offer, folks, do me a favor, give it a try. Go to our website under free trial, sign up there. Call us. If we don't pick up the phone, leave your name, number that you want a free trial. We'll get it out to you. Make sure we have your email address as well. We generally call you right back, not in the middle of the night, but certainly by the next day. And our new phone system, the coolness of it, it rings to our portable phones and it records our messages, our conversations, and everything. Very cool stuff. Technology changing the world, as we've seen. So in summary, give this a try. Be careful. You're now just days away, as of tomorrow, 6 days away from the election. We don't know how bad COVID's going to get. You're hearing more cases breaking out and countries taking radical action. Be cautious. I'm Ira Epstein.